Homie, don't you know me? You probably don't, but my name's Justin Taylor. And damn it, we're gonna talk about my favorite topic today, which is making money. More specifically, how to invest during a market crash, similar to the one that we're finding ourselves in right now, so that you can make a ton of money. Let's go. All right, it's no secret that we are in the midst of a market crash, a fairly substantial one at the moment. And if you're paying attention to the headlines, you know that the markets are crashing, our entire global economy is on the verge of collapse. People are living in fear and selling off all their investments just to ensure they have enough money to eat. Companies are failing, people are going to lose jobs, and families are going to fall apart. There's a global pandemic on the loose, and coronavirus is about to send us into some terrible post-apocalyptic world where governments will turn against us, big banks will crumble, religion will be banned, and we'll all be forced to fend for ourselves. Fake news. While the media likes to hype everything up, there is some pretty crazy stuff going on in the market right now. Last week was one of the worst weeks for Wall Street since the financial crisis of 2008. The S&P 500 dropped by nearly 12%. Company share prices are taking some major hits. And to top it all off, we're on the verge of what they're calling a global pandemic with this whole coronavirus thing that's going on right now. After being in one of the longest running bull markets in history, we've now entered correction territory. And if you're not familiar with that term, stock market correction is a period defined by a drop in stock prices of 10% or greater from their most recent peak. And if prices drop by 20% or more, then we'll officially be in a bear market. But as crazy as this all sounds, this is an exciting time. Right now, we are being presented with some major financial opportunities. This moment right now, this day, week, month, will be plotted in charts. And at some point in the future, it could be 5, 10, 15 years from now, you'll look at the historical performance of the market and you'll either say, that point right there, I took a risk and did the opposite of what everybody else did, and that point right there made me a fortune. Or you'll end up saying, wow, I wish I would have invested then. See, I view market crashes as remarkable opportunities that we don't get very often. It's hard to invest during a market crash or a recession. It can be scary. Putting your money into investments that will likely see an immediate drop in value takes a lot of courage. It's not easy to invest during uncertain times. But oftentimes when you take a big risk, that's when you experience the greatest returns. The majority of us are most comfortable investing during a bull market, which will give you a good, consistent return. But when the market appears less favorable is when people have the opportunity to generate massive amounts of wealth. And if you're thinking, who is this guy that's gonna tell me how to invest? How can I trust him? Well, let me build some credibility here. While the overall stock market dropped by 12% last week, I was able to actually increase my $3.82 Robinhood portfolio by over 0.5%. So as you can see, I obviously know how to grow my wealth even during economic downturns. I still don't use Robinhood. All right, joking aside, when the market goes down, it's a good time to get in. Have you heard of the saying, be fearful when others are greedy, be greedy when others are fearful? This applies right now. People are fearful. Right now, we're seeing the start of what's known as panic selling. Panic selling is driven by fear, and it's when investors start dropping all of their assets. Whether they can't stand to see the value of their portfolios decline, or they think they can take that money and time the market by investing at a lower point, or they feel more comfortable during uncertain times by having more cash on hand. Whatever the case is, this panic selling causes sharp declines in prices. And in addition to some of the other things that are taking place right now, panic selling is playing a small role in the drop in company share prices that we're seeing at the moment. But when others are fearful, we want to be greedy. We want to be greedy all the time, but now especially is the time to make the decisions that are going to set you up for extra financial success. Let me give you a perfect example of why you don't want to sell. December 2018, the recession hype was at its max. 2018 was filled with fears of a looming recession, and we had finally made it to the last month of the year. We were 10 years past the 2008 recession, and recessions are supposed to happen every 10 years, right? Well, many people throughout the year started selling off their assets and trading in their investments for cash. Investors were dumping their stocks left and right, and major stock indexes in December of 2018 had their worst December since the Great Depression. And this was not only fueled by recession fears, but at the time we were kind of in this trade war with China, if you guys remember that. Interest rates were changing, and even politics at the time affected the market. But regardless, people started going liquid. They started cashing out because of their emotions. Fear got the best of them. And many of those people still to this day have not reinvested their money because they're still waiting to buy back in at a lower point, or because they're waiting for the next recession to come and go. Well, in this example, the market shot back up the following few weeks in January of 2019 and all throughout 2019. And those that kept their money invested and invested more during that time period saw some solid growth. And as you can imagine, those that took their money out of the market most likely missed those days of sudden recovery. That is exactly the case we're in right now. We're in a period of decline, but the stock market will absolutely recover. So the number one thing I would say is do not sell. If you look at the historical performance of the stock market, there's fluctuations, some bigger than others, but overall, long term, the market will trend upward. Now, my disclaimer, when I say not to sell, I mean don't panic sell everything you own, but there are reasons why you may want to shift or reallocate some of your invested dollars. And if you own any companies that won't survive an economic downturn, are a part of a failing industry, or you just have any stupid investments that aren't good long-term plays, it may make sense to sell. I don't know. Just hold your investments. It's what Warren Buffett would want you to do. All right, I'm gonna hit you with some more words to live by when it comes to investing. We've all heard this one before, but it's about time in the market, not timing the market. At the time of this video, the total stock market has fallen by about 12%. And just from what I've read, many people are thinking that over the coming weeks, the market may drop by as much as 20 to 30% total. And I would love to buy at the absolute bottom. But of course, nobody knows exactly when that will be. Check this out. I have another example to share. $10,000 invested in the S&P 500 index for a 20-year period from 1999 to 2019. If you would have left that $10,000 fully invested and untouched, it would have grown to $29,845 with an average annual return of 5.6%. But if you missed the best 10 days during that 20-year time period, just the 10 best performing days, that's it, you would have reduced the growth of your initial investment by more than half, leaving you with just $14,895 with a 2% average yearly return. And if you missed the 20 best performing days, you would actually lose money. You would end up with $9,359 and a negative 0.3% return. Numbers don't lie, people do. I don't know why I said that, it just popped into my head. I'm like, what, 6-7 minutes into this video? This is the point where my attention span starts drifting and I just start saying nonsense. Just think about that for a second though. If you took your money out of the market for just 20 days over a 20-year period, you would lose money. How pissed would you be if you invested your money for 20 years and got a negative return on it? So the key takeaway here is to leave your investments alone. Don't try to sell them and buy back in at a lower price because it can be very easy to miss those top performing days that are responsible for the majority of your growth. Sometimes the biggest recoveries happen right after some of the worst performing days. And if you miss those spikes, those increases, you're fucked. Go home, just give up. You basic. All right, so if you got some extra cash lying around, at what point do you put more money into the market? We just covered why you don't want to take your money out of the market, and we know that now is a good time to actually invest because the market will go back up. But when and how do you put more money in? Well, you don't want to try to wait until you think the market is at its rock bottom because it might bounce back and you might miss that perfect opportunity. But on the other hand, if you invest all of your available funds right now and it drops another 20%, you're going to be a little disappointed that you didn't get to take full advantage of that drop in the market. So for me personally, I've been a little heavy on cash lately. Maybe I'm guilty of somewhat trying to time the market or whatever. But I've got a chunk of money, right, set aside specifically for this period in the stock market we're in right now. And I've rationed that out, so to speak, to invest small portions of it at a time. That way I'm not going all in at once in case the market continues to drop. But at the same time, I'm not doing nothing and completely waiting for that 30% drop that may or may not happen, or that I would likely miss if it did happen. So for me personally, that's my strategy at the moment. I actually just put a couple grand into some general ETFs a couple days ago, as well as a couple specific airline companies. 3M is another big one that everybody's talking about right now. Bought a few shares of that, as well as a couple others. But this whole coronavirus thing is definitely going to blow over. But for now, I'm doing my best to capitalize off of it. This is kind of a scary situation that we're in right now, but there's an opportunity to profit off of it. So That's what I'm doing. And as far as the investments I've made over the past few days, I expect all of them to actually continue dropping in value. I'm okay with that because I know I'm still getting a good deal on the positions I'm picking up because it's all about the long term. I may take a short-term loss and stocks I bought today may be worth way less tomorrow, but it doesn't matter because long term, I'm gonna come out ahead. In other words, I like buying on red days. I want my money invested on red days because that way when I see green days, I know I'm getting a piece of that action. I've got skin in the game and my wealth is going up just like that green trend line is. So the point I want to focus on here is simply encouraging you to invest. Take advantage of this opportunity to grow your wealth. I think this is a good time to get your money in at a low point so that it can grow to be even that much more in the future. If you have extra cash on hand right now that you know you're not going to need for a while, why not use it to buy some assets on the cheap? All right, my friends, keep making money. Until next time, peace.